Oh no, mine it has to be over here. Share screen. Uh, oh no, mine it has to be over here. Share screen. There you go. Are we good?
Yep, we're all good.
All right, just let me know when I can go.
Good to go.
All right. Hey everybody, Michael here. Hope you guys are all having a good day. Today we're going to be taking a look at the moving averages revolving around Bitcoin here. We're having some bad signals that we haven't seen in a very long time. However, I do not think that means that Bitcoin is going to be breaking down to like new lows for this cycle. I don't think we're going to be going down to 15,000, 13,000 anytime soon. For that, I'll have to give you guys a little bit of a longer explanation here. But over the last few weeks and days, we've really seen a lot of action with moving averages, especially right here. If you guys look over the past few days, you guys can see two specific death crosses. Basically, the 20-day moving average has crossed down below the 50-day moving average. We've seen the 20 cross down below the 200. And most recently, we've seen the 50-day moving average crossing down below the 200 moving average. On top of that, we've seen a monster, and I mean a monster bearish divergence right here, where the oscillator has been having lower highs, but the price action of Bitcoin has been resulting in higher highs. That's called a bearish divergence. And see right here, I think, right there, lower highs versus higher highs. Okay. Now, this has been working out for both Bitcoin's daily chart and its weekly chart. And, if you guys have been following it around a little bit, it's been actually making you some decent amounts of money, especially if you guys have been adding just a touch more lag onto the MACDs. It's been a very good source of income here over the last few weeks. Now, as we go over here to the weekly chart, we're seeing something a little bit similar and a little bit different. We're seeing, let me go to that line. We're seeing lower highs again and higher highs over here, another bearish divergence. But fortunately for us, like we talked about last time, we found a way to bounce off the support levels around $25,000. So if you guys took that opportunity to buy, you guys are just fine right now. You guys don't have to panic. You guys have your stop losses in, and you guys are looking for more money. If you guys didn't listen when we were talking about the breakdown that was coming way up here at $30,000, then you maybe are down just a little bit, but really you're not really concerned about where Bitcoin is. You're really concerned that your altcoins have been coming down a lot over the past few weeks. I think that's the really big concern that most people are having at this point in time. However, we're about to have another death cross here between the 20 and the 200 weekly moving averages here. And basically, this is what that means. Historically, when we have these breakdowns, they're really bad signs. For us, though, we really aren't used to seeing the 20-week moving average, which is this green line, break down below the 200 weekly moving average. You can see it happened right here. And what happened? We came down a little bit more. But honestly, if we were just to zoom into this just a little bit more, this I don't think was supposed to happen. This was FTX, Sam Bankman-Fried, the big trial that's going to be starting up next month. That's what happened there. I think we probably would have just came back down, maybe hovered around the support level here. And then eventually, once the new year started, we would have had that big kickoff there like we did, like we did actually end up having. But it might have gone up a little bit higher. So go back in time a little bit more. We've never actually seen the 20-week cross down below the 200. We've come close lots of times, but we've just never seen it. We've had plenty of death crosses between the 20 and the 50 here, a lot, right? 20 and 50 usually is a very bullish signal. That's when everybody starts to freak out because they know a big drop is coming. It even happened before COVID, right? Go back over here. Look at that. Really bad moves. So that's not really the one I'm too concerned about right now. And I think that's part of the reason that we're actually seeing Bitcoin hold up here just a little bit, especially because we have this large level of support. If we break down below this level of support, this is going to be where you guys are going to be very concerned about the price action of Bitcoin and altcoins, because that's where things really start to go bad, and they go a bit bad pretty fast. Okay. Now, this 20-week moving average, it is going to most likely cross down below the 200 here, unless Bitcoin's able to have a large spike week after week after week after week for the next month and a half. Okay. So you're looking for it to get back above the 20, and then from there, at least try to get back to $29,000. The specific reason for $29,000 is just because there's math that kind of goes into these daily moving averages. I use simple moving averages, so I don't really have to overdo the math here. So it's just taking the average of the last 20 days and plotting them on a point. So for instance, right here, let's go for the last 20 days. we're looking at the average right here of the last 20 days. Okay, that's where the moving average is. It's kind of just hovering in the middle zone up here, or to the higher zone. But here's the thing I want you guys to focus on. Every day that we go on, we're replacing a candle that has like tomorrow we were replacing a $29,000 candle with a about $26,000 candle. Okay, that means this moving average is going to continue to come lower and lower and lower and lower. That's going to have a squeeze effect on the price action of Bitcoin. Okay, you guys can see we tried to break back out earlier, we got rejected. Okay, tried to break back out above it. Those are levels of resistance, and what you guys are seeing right now is this: a big move coming on the horizon, where pretty soon Bitcoin's going to have to choose one way or the other. Almost think of it as a set of trend lines that we're going to have to deal with. It is going to be an exciting time. Unfortunately for us, that might mean that Bitcoin stays kind of boring for the next few weeks, honestly. We did have higher than expected inflation data. I wanted to talk to you guys about that very fast, but it's just been a time of meh, I would say, as far as the economy is concerned. You guys can see right here, we're at 3%. Then we went up to 3.2. Now we're at 3.7. There's a good chance next month we go back above 4%. And that's not going to be a very good sign at all. The reason why I bring that up is because once we actually saw in July that inflation was starting to creep back up, a lot of negative stuff happened here. Okay. We saw Bitcoin here at the beginning of July find its top and did not go any higher than that. If we had a good CPI, I bet we would actually broken up above $35,000. It would have been a very monster move. But you see everything else. The dollar index, look at that. It popped back up once that happened. Then we had a breakout, but it all started in July. You can go over a number of different things here. I could even pull up oil, and you guys can see that oil found its support down here right as we were dealing with the hotter than expected CPI. Now, we've already had the breakout. We're looking for a consolidation range here. So far, the consolidation it's okay. We're still kind of in that breakout momentum, I would say, actually. But we could see oil get above $100, and that's that's not going to be good for anybody, right? Now, unless you're holding some oil stocks like myself. However, for Bitcoin, it really is going to be important that you guys are looking at your altcoins, because if Bitcoin breaks down, which I think it will here, we're most likely going to be moving back down here just to about 21,651. It looks like you could almost try to tie that up with right here, this old level of resistance. Now, we do have a zone, I would say, if you wanted to do it like this. For me, though, when we do break down below these moving averages, they tend to be very violent unless there's some type of large support. So if you wanted something of a buying zone, you could really just say, hey, anywhere between 23,000 and 21,300, that's a solid buying opportunity for us. A simpler way to do that, I would say, is just to add your Fibonacci retracement level on right here. And you're going to see we're going to be breaking down below this. And really anywhere, if you want to stretch it out a little bit longer, 24,000 to 20,000, that's going to be a buying opportunity. Personally, again, for me, I'm going to be aiming for the lower part of this. I don't want to really buy too early unless you guys are scaling in, which is the safer way to do it. I'm just choosing to be a little bit more greedy. Okay. However, when we go back over to the daily moving averages, this is where a lot of you guys are going to be more concerned for your day-to-day trades, maybe your swing trades and stuff like that. You guys can see we're losing momentum, and each candle bar here is getting smaller and smaller, filled by the doji here. We're probably looking to test out the support level from way back over here, and you guys can actually see that just right around there. Okay, that's what we're testing. If we break down below that, we're probably just restarting the cycle here and going down a little bit lower. But I really want to focus on the moving averages right now. Death cross here, death cross here. You can see how this death cross had an immediate effect on the price of Bitcoin, unfortunately. And right here, this could also have an immediate effect over the next few days. Okay, now, last time we had these two death crosses, what exactly happened? Because usually when we have the 20 cross down below the 50, like we did right here, usually it's not a good sign, But we have times like this where there's big news events, and you can see this was during the banking crisis of last March, where it's a lagging effect and the market decides to bounce right after it. And that was because a whole bunch of stimulus was added straight into the economy because nobody had to fear that their bank would collapse. Like everybody would be made whole, if you guys remember that saying. Okay. Going back in time here a little bit more, look at what happened back over here in the bull market. both times that we had the 20 crossing down below the 50, those were really bad times. Really, really, really bad times. The only time it wasn't was right here, but we weren't really close to any type of major highs, I would say. And plus, we had a lot of stimulus in the economy. However, we also just had a golden cross here on the 50 to 200, which is usually more influential, I would say, than the 20 crossing down below the 50 or the 200, just so you guys know. Historically, when you have these big crosses happening above the 200, those golden crosses, very good signs. Sometimes they lag a little bit more than you would like, and that's because we have major historical events like COVID. But, over here, things got choppy. What happened? We came back down. Death cross. Overall, we ended up coming back down. You can see how we still are able to have these little pops and so forth, but overall, we ended up coming down. So over the next few weeks, because again, we did have a hotter than expected inflation report, a lot hotter, we're most likely just going to be taking another dip down. One of the things I think that would serve you guys well if you guys are trying to plan this out long term is to actually open up a Bitcoin monthly chart. And you can see this one right here. It doesn't go back in time far enough. So you guys are probably going to be looking for the one that's on Coinbase as far as Bitcoin's concerned. So it'll just say Bitcoin to US dollar, right? And right here, usually the ones that don't go past like 2017, usually those are Bitcoin to USTD. Okay, so they're up against a stable coin and not the dollar. So one of the things I would recommend is something that I call cluster buying. Now, cluster buying, it's not new. Not many people talk about it because they're always it makes your chart look kind of sloppy. But if all you're adding on are just clusters, I think this is going to be something good that you guys are going to care about. So all you guys got to do is find the low. And I'm on a monthly chart here for Bitcoin. And you're just adding a bunch of Fibonacci retracement levels. And you can already see with the first one, look at that. It's held there, held here perfectly, and then it bounced back up, okay? Normally within the weeks and days and stuff right here, you'll find smaller levels of support, but you can see how we bounced right off of that, no resistance here, but it was okay. But the reason why it's called a cluster one is because you're actually adding multiple Fibonacci retracements here over time, so you have a really good idea of what's coming forward, okay? So let's go over here. And it doesn't take too much time to actually add these on here. It's pretty simple. And we're just going to add one all the way back down over here from 2011, just for the sake of it. And then pop it up right here. Now, you have a set of clusters that you guys can use. You guys can even go back to the weekly chart if you guys want to. All right. Usually these little clusters are good opportunities to buy. If you buy around here, usually a few weeks later, you find a way, you found out that you're making a decent amount of money, okay? And it's only on the first time, though. First time here, if you waited a little bit, you made some money. First time here, even if you bought in this cluster, guess what? You made some money there. Not all of them are going to be great, but usually it's a safe time to buy where if you're just patient, you're going to walk away with some money. This goes for Bitcoin. There are other things out there, but usually Bitcoin is where people like to use this method. Right here, cluster. If you guys bought during the cluster, well, guess what? You guys ended up making some money, okay? As it breaks back through clusters, I actually don't like to trade too much during that time. That's usually when I like to sell off a little bit. You can see right here, selling off a little bit, right here, selling off a little bit. Historically, you buy right here, although all of these would be slightly different because they'd be right here. So they might be just a tad bit lower, but you buy the cluster, you come back into it, boom, you're looking a little bit better. Or I guess we weren't really running into the cluster, were we? Excuse me. Now, if you want to make this a little bit better, this is what I'll say. You want to go back into that monthly chart. I wouldn't even call it better, but sometimes you get better results. You guys can actually come back over here and you could add a few more on. But each time you add these ones on, you're going to go over to the settings and come down here and you're going to turn off fib levels based on log scale. So for each one going forward, we're just going to have that automatically turned off. And then it helps you see the clusters just a little bit better. We're not going to go all the way back to 2011 this time. Now we're just going to go over here to the daily chart. This is where I meant that the charts can get very, very clustered, excuse me, or sloppy. All right. But if we go back in time now, what do we have? A support level for buying right there, a support level for buying right here. And you notice the first time, it's usually the best time to buy. The second time, you can see where it gets a little bit more difficult. You don't want to use this on the second attempt. You usually use it on the first attempt, okay? Sometimes there are exceptions to the rule like this, but you can see how many clusters there are here. That's a lot more support than just 3 lines like we have over here. This one is 5 lines. Wow. Okay, but you guys can see cluster, buy. You see the cluster of resistance right there. That's where I usually like to scale out. Resistance, scale out. We broke above it, ran into the 200, but I would still be happy buying around these support levels here, maybe the breakout there, and still selling over here. It's okay if you miss out on that one. It just depends on your personal strategies. And what happened? The third time we did not manage to hold, but guess what? We had another cluster. So if you guys want to move that all the way over here, you can see another type of cluster right here. Usually I'd like the clusters to be a little bit closer, like, this is kind of wide, but to each their own. Some people might have actually taken on that trade. I might have taken on that trade, but I think that's why it's important to kind of have look at the daily chart, the weekly chart, and the monthly charts. But going forward for us now, we really don't have any major practice. However, we do have this kind of a zone to speak of, kind of matches with the zone we talked about at the beginning of the stream here. So if you guys are looking for something nice, you could already see this is where the selling zones up here. We got back above selling. I'm going to be looking to buy somewhere between $22,000, $23,000, and I'm hoping that that's going to be strong enough. However, again, if inflation does not cool down, there's a good chance that we might be coming back down here to $18,000, $17,000. I wish we could use the cluster method on other types of time frames. Like I wish we could try to use it on this Bitcoin daily chart, looking over what's happened this year. But I always find it to be a little bit more difficult here because you had this right there. There's really not as many points you can actually go for, honestly. But you can see right now, we do have a minor cluster right here, and it's been kind of nice. But you see how there's just no clusters really right here. We just have a slight one right there, but see how that didn't work? That didn't work. You had to wait for those two Fibonacci levels that were really close together. And even when we break down, you guys can see there was still that level of support right here. So it doesn't work out the best all the time, but it can give you a little bit of heads up like, hey, look to see what could be going on in the future. Sometimes if you're just looking for a good level of support, that's usually what I care about. And again, the first time is usually the best time. You can make some money here. But again, some people may try to do this in the third, fourth, fifth time, and it does work out sometimes, but then, it works until it doesn't. So the first opportunity is usually the best for me, I would say. And then you guys could always go back over here and redo it. But again, instead of having it ticked like this, you could actually turn the fib levels based on log scale back on, and then you could actually move it around a little bit more. And maybe that'll help you out a little bit more for your charts, okay? And in fact, let me move this over here, okay? And so you can see that's actually the Fibonacci level that we've been looking at right here. So, but again, no clusters. Not really a lot of clusters happening right now, which is why I don't normally like to use on the daily charts like this. I like to look long-term. And long-term, we are really not at any major support levels here, so it's going to be interesting. However, one more thing here as far as moving averages are concerned and things of that nature. Really keep a close eye on how patient you can be. One of the reasons why I'm overall so bearish on altcoins is because if you look at Bitcoin over the last few months, and this is a weekly chart here, you'll see that Bitcoin has been going sideways, right? It's been, I don't even know, it's been about 175 days or 25 weeks of Bitcoin pretty much just going sideways here in this pretty basic trend, okay? Last 25 weeks. If we go over here and we start looking at other altcoins and stuff like that, we have stuff like XRP, which has had really, really good news, right? So if you go back 25 weeks, you'll see that it's up a little bit. Not a lot, but it is up off the news. But if we go to most other stuff like Ape Token, this is what you guys are looking at as far as altcoins are concerned. So you guys have to be very, very, very concerned. I wish there was good news about altcoins, but if Bitcoin continues to break down here, or if it does break down, let me say that, off of these death crosses, your altcoins are what you're going to be most concerned about. I'm still happy to continue dollar cost averaging Bitcoin, buying some up for the long run. However, when it comes to the altcoins, you guys are going to have to be very picky about what you guys want to buy. I'm just going to go down on a list of all of them and kind of show you guys what's going on, because some are doing better than others, and you guys should kind of understand that you should be shopping around a little bit more and not just going to what the big thing is. Remember how big Ape Token was? Well, it's coming back down very, very fast at this point. AVAX, with that coming back down, this is actually down below the lows we saw of 2021. AXS about to break down. You can kind of see the support levels in your eyes, and you can see the death cross that happened right there. Bitcoin Cash had a really big pop. This one's been doing okay. This follows my rule. Remember, I told you guys I'd be investing in stuff that you guys can find on Robinhood and Webull. Usually those crypto assets have a lot more money attached to them, which are really fun to trade. That still rings true to this day. I will say that over and over again. Matic, even Matic. I love Matic. Death cross happened right there. And what happened? We went down. Another death cross happening right here between the 20 and the 200. And we'll see what happens. But we already broke down the support. We're heading back down to the lows of last year, which isn't going to be good. And then we might actually end up coming back down here to 32 cents before all is said and done. I hope I'm wrong about that. If you want to be bullish about a lot of these tokens, they all give you pretty good setups for breakouts. So just, just wait and see if there's a breakout, but that might not happen until October. So give it your best shot. BNB is it's in its own crisis at this point because of, Binance US, the lawsuits, all that type of stuff. But we've already come down a lot, and we haven't even actually seen the big death crosses here. We had that death cross, and boom, we came down. Just wait till the 20 crosses below the 200 and the 50 crosses below the 200. BNB is coming back down, maybe below $80. Let's not call it all the way down to the next support level of 40, but it's most likely coming back down to at least 114. So it's going to have a really miserable time from a technical perspective, unless there's news that can really pump the asset back up. Chiliz, this is lower than where it was last year. Crowcoin back down. This is all-time lows here. So just understand that when Bitcoin does take this drop, which I do think will happen over the next month or so, there's no hurry for it. Just understand your altcoins are going to be the things in danger. If you're looking at things like Ethereum is holding up just fine. It's managing to hold some support levels up. But don't be fooled. You're starting to see those warning signs here. We're tapping on support. Another reason where everybody bought up Ethereum the last few days. However, you guys need to see a breakout here. Otherwise, Ethereum, just like Bitcoin, will take that next level drop. And you can add Fibonacci levels and stuff onto this as well. But it most likely is going to be all the way back down here to like 1371. So it may have made a little over $200 loss, which isn't crazy. But I just want to point out to you guys right here, we've already had the death cross here, okay? That's not a good thing. That death cross happened right here, okay? And you can see what happened afterwards, okay? And we're having another death cross happen sometime in October. You guys have these warning signs. It's not about freaking out, panic selling, and things of that nature. It's just having a plan set in place so that when it does eventually fall, or if it does eventually fall, let's not try to predict the future all the way here. But if it does decide to fall, you guys will have these buying zones that you guys can have on your charts ready to go. You could have everything set up. You guys can even have limit orders placed, or trigger orders placed, where if the price drops down to this certain level and it's middle of the night and you guys are sleeping, hey, it'll automatically take a buying position for you. The big caveat to a lot of this is there is one big scary news event that could happen. We talked about it a couple seconds ago a little bit, and that's with the Binance layoffs. Let's see. Cointelegraph will be a decent one to go to right here. Two more top executives depart Binance.us amid layoffs, SEC action report. So everybody's jumping ship here, okay? Everybody's jumping ship as far as Binance, and there's been a lot of people just flat out quitting, okay? Now, because of that, unfortunately, it leads me to believe that Binance is going to go down. And I hate to say that because I like Binance a lot. It's been around for a while. But the fact that they're in so much trouble and their own executives are choosing to leave, the executives are, not the rank and file, but the executives, that signals a larger problem. And those executives don't want to be, they don't want to, be in any court hearings. They don't want to deal with any of that because it's very, very expensive. So just keep in mind that we are looking at a couple death crosses coming up. We see the weekly death crosses coming right here. The daily death cross that have already happened. And then for you guys that like to look very, very long term, I don't exactly know what this means here, but we're about to have a monthly death cross, and that's most likely going to happen at the end of this month or maybe the end of next month. Kind of keeping a close eye on this one. I would probably say it's going to happen October 1st, if I'm being frank. But we've never actually had this happen before. We've come close, but we've never had the 20-month moving average cross down below the 50-month moving average. It's not something that happens. We can go back and look at other types of assets. So like you may look at something like a NASDAQ, right? It usually happens in bad cycles, but it's such a lagging indicator that it's hard because it doesn't happen. It doesn't happen all too often. Okay, guys, it just doesn't happen often. I'm not going to say it's going to be some terrible event, but it's not a good sign for the market when we're seeing those types of moving averages. Okay, you could already see right here, as far as the NASDAQ is concerned, it's in a nice uptrend. It could be breaking down here over the next few weeks. You see the Dow Jones already broke down, and now we're just waiting to see what's going to happen here over the next few weeks, especially since we're trying to hold this 20-week moving average. The SPY, I was looking for a double top, but that definitely did not come. I don't know where my line went, but we're really far away from a breakdown right here. SPY is probably the safest one to be hopping into right now. However, watch to see what happens as we play around with this 20-week moving average. We've only had a golden cross here. We're nowhere close to these death crosses here. Dow Jones, we're looking for a death cross eventually, but nothing too much. You could even see how that golden cross worked its way back up. That death cross is going to make its way work its way back down. I don't think back down to these scary levels we saw over here. I think a recession would start that, but we're not in a recession just quite yet. It might just set up some type of channel where we're looking to come back down here to 32,000, 31,600, probably just play around with this 200 weekly, okay? And again, SPY, really far away from moving averages. NASDAQ, really far away from those moving averages. Daily charts, however, you guys can see a little bit more choppy, right? A little bit more choppy because of that death cross. And we're not going to see a larger death cross happen until like October, I would say, for the NASDAQ. It's been tearing up a lot. Even the Dow Jones already had that death cross. You guys can see the effect of it. We're still not going to looking at those larger death crosses between the 20, the 50, and then the 200 here. They're going to be quite a bit away, okay? Now, some things I want you guys to think about long-term here. Most of the time, when we plan out you guys' buying opportunities, we've kind of settled on this zone over here. Let me just add a box to kind of symbolize it. Just right around here. We have the zone. This is a pretty wide zone. I'm looking to probably buy at the lower end of it, but you guys can really start buying right around 22,000 to 20,000. That's fair enough, right? Fair enough. Now, what happens after you guys buy? Because usually, again, the first time you guys buy this large level support, it will tend to bounce. But after that is when you guys start to have a little bit more problems here. And I think that's what people have to make sure they understand what's happening. So if you guys buy around this zone, I would honestly only try to sell this back up in this zone right here, which is going to be around $24,000 to $25,000. That means you could be buying around $21,000. Let's just call it 21,600. You guys are only going to be looking for a small amount of profit. That's going to be about 12% profit. Okay, you're really going to be making a lot more money when it comes to altcoins at this point. Okay, because if you break down, remember the overall trend will then shift to moving downwards, and that just means, if I can get my arrow here, we're going down. Okay, overall down. You guys aren't going to really buy and go heavy unless you guys are waiting for some type of breakout, and those breakouts are what really will make you guys a lot of money, right? Wait for the breakout to occur sometime in the future. That's when you guys can hold with confidence and everything will be okay. Same thing happened here, right? You waited for the big breakout, everything worked out. I would almost say that it would have been actually fine to buy right here. You can see how you bought right here, the breakout, it was going up. But again, news events happen, so just have your stop losses prepared. But now I don't think we're going to have an FTX every single month here, every single week. So you could trade with some confidence that, even Binance isn't just going to crumble like that. We're going to have big flashing warning signs in the news and everybody's going to be freaking out. Then you guys are going to be, just, it'll allow you guys to keep your cool just a little bit more. Okay. Now, let me back up a little bit more here. Looking more long-term at this and what we're kind of seeing here. Long-term here, this is like over the next few months. We do see that we're looking at this death cross here on the weekly chart. We're going to have another one here sometime, if I want to time this out properly, maybe towards the end of October or the beginning of December. That will most likely drop us down another level here from wherever Bitcoin is at that time. Okay, I don't know if Bitcoin's going to be all the way down here or if we're already going to be down here and then bounce back up by the time we have the death cross. But I want you guys to remember that the next time you guys see the support level down here, if we've already bounced above it once, it's going to be much harder for us to hold it a second time. Okay. And this is where I think you guys really need to be focusing on different tools like the MACDs. Oh, let's go open this up right here. The MACDs and other oscillators out there. A couple that I'd recommend, because this bearish divergence has been very helpful, is you guys could always add the RSI. If you guys are new to trading, this is always a simple one. I don't particularly like to use this one myself, but it's there for you guys to help you out. What I like to do is add the stochastic. This is something I prefer. And let me actually go over here very fast and just make this a little bit easier for you guys to see. There we go. All right. This is usually giving me good opportunities to buy and sell. You can see we're in the oversold zone right here. This is where people start to buy. And you can see over the last few days, people did buy up Bitcoin, and it was actually pretty good. Even though you can see the MACD right here, we actually haven't had any bullish crossovers. There's usually a little bit more lag in a MACD, to be frank. That's why you only see so many signals like, hey, a bearish signal there, bearish signal there. Usually with this one, you guys are seeing lots of bearish signals, which can be kind of confusing. But you guys can always add on different amounts of lag, I would say, if you wanted to. Maybe what I could do for you guys right now is actually, do I still have it on my computer, though? That's the big question here. No, I don't think I do. Let's see. I do have it here. Sometimes what you can do is you can actually have a add lag onto this to make it so you don't actually have so many false signals. Some settings that you might want to use for this are going to be 60 for the K, leave the K smoothing at 1, and the D smoothing is going to be set to 16. Hit OK. And you see how you have a lot less lag. Now, you're not going to have as many signals. So maybe if you want a lot of signals, you're not going to use this method. All right. But what it can do is it helps you on longer term trends. Okay. Longer term trends, longer term crossover right there. And you can see it's not 100% perfect, but it kind of helps you out, especially when you're looking for those good buying opportunities. Because right here, you can see it didn't work out too well. This one, it didn't work out too well. But what are you guys looking for? You guys are seeing that death cross coming. Why would you buy going into that death cross, if that makes sense? You have to use this as part of a whole strategy. You're not just going to be using this by itself, but you could put 2 and 2 together here and you say, hey, there was a death cross right here between these two. That's not a good sign. We have this massive bearish divergence. That's not a good sign. And we have these death crosses coming up over here. That's also not a good sign. Okay. So it depends on how you guys want to use it. Another way or another tool you guys might want to add, if you guys are looking for momentum, a lot of times I feel like you guys are just buying a little too early or too late, and you guys should be trading with the momentum so you can just get in, make your money, and get out. Makes life a lot easier, right? Is I would be adding the squeeze momentum indicator onto Lazy Bear. From Lazy Bear. This one's pretty simple. I'm just going to change the colors here, but gray is good and black is not good. Now I have a black background, obviously, so it's not going to show up the way I want it to. I'm just going to turn that to be red, and then there we go. All right. Let's go back to third. There we go. Okay. So when you see this go from red to green, and then you also see the crosses turn green, that means the squeeze is being released. If you guys see the red, that means we're in the middle of a squeeze and there's usually not too much volatility. Obviously, it doesn't work when you're having major events like this, where FTX is going down or Celsius is going down. We're not always ready for those major events, but you guys can see right now, Bitcoin is being squeezed. And if you look at it, like, from a longer term perspective, we really haven't seen too much go on over the last few weeks. We've kind of just been going sideways here. Started down here, we're still down here. We had a pop, but we got rejected off of some resistance. Really CPI data up there. However, where can we go next here? Draw this down to the daily. There we go. If you always put this on the daily chart right here, you can see that we're starting to get some squeezes. And usually on those squeezes here, you can start to trade with a little bit more momentum. I prefer to use this on the weekly chart, or maybe even the hourly charts for myself. But when those squeezes happen, you're looking to trade at with a smaller time frame. So if I'm using this on the hour chart and I see the squeeze happening, I'm actually trading on a 15 or a 5-minute chart. Okay. That's something that could help you guys out. I wouldn't trade on the daily chart using this squeeze momentum indicator while it's also on the hourly chart. Okay, I'd be looking at this on a daily chart, and I'd be trading on a 2-hour chart or an hour chart, if that makes sense for you guys here. Now, One other thing, this is a simple thing. It's one of those free indicators that I like to use every now and again. Let me just add the smart money concepts on here. And this one needs to have the settings turned on. I can see they're not. There you go. Internal structure, swing structure. There you go. So this will usually give you a nice little telling of, hey, if you guys looking for change of characters, break of structures, if you guys looking for ITC or ICT concepts and things of that nature, these indicators are really going to be good and they're free. This one is like Luxagos, I think. Excuse me. But when you break it down to the daily charts, you guys will see a lot of buy signals and sell signals. Like this sell signal wasn't good. This one was. This buy signal wasn't good. This buy signal wasn't too good. It depends on what you guys are looking for here. What I tend to say is add on a super trend indicator on that one as well. That way you guys can be a little bit more comfortable. Usually when it comes to super trends and stuff like that, you're usually going to want to use the settings 50 and 5.1 and HL2, although you can go to HLC3 or open high, low, close 4 if you want to. But if we back this up to the 4 here, when you see this change of character plus the buy, you can actually add on some of these other signals here, like right there. See the golden cross right here, the crossover on the MACD. If you have those 3 signals, you guys are obviously going to be holding and you guys can make some good money there. And that's an easy way that I like to trade. You guys can add on these other settings too, like the stochastic. If you wanted to see the stochastic crossover right there, that's a good sign. And the squeeze momentum indicator, see the squeeze is starting right there. That's a good sign as well. So usually you can take those opportunities to buy up if you want to. But, to each their own on their specific strategies, right? I just want you guys to understand that when we see these big moves coming down because of these larger moving averages on the weekly charts, the daily charts, it's better to go into that momentum. So if you guys are looking at a death cross either here or in the future here when the 50 gets crossed over, right? You guys will know that there's more bearish activity ahead, and therefore you're most likely going to want to trade and go bearish trades when you guys see the smart money concepts indicator telling you that there's a big downward move coming, the super trend telling you there's a downward move coming. Like, this is my personal super trend setting. Not everybody has access to it, but usually this has been helping me out a lot over the years. And this one still says we're in a selling motion here as far as Bitcoin's concerned. You do see we have some buy signals in here every now and again. I fine-tuned this a long time ago. This was not meant for double whammies in the bull market here. So this was actually a big wrong signal. However, how do I say this? We were still overall, I can show you guys this right here. We had that MACD crossover right there. We did have a huge bearish divergence here, which eventually played itself out. But there were some signals that, could have made you guys make some money here, especially that cluster method that we talked about earlier. But it really depends on what part of the cycle here you guys are looking at. All right, buy signal right here, change of character, MACD crossovers. I know it's kind of hard to see, but MACD crossover, and then boom, we're off to the races. Let me go back over here very fast. So just be aware of what's coming, guys. It's not going to be pretty over the next few months, but if we were to have some good news, I think that we should be able to hold at least $20,000. That's really going to be the worst case scenario, unless something really, really bad happens to the economy. I think some of you guys might have seen this news in the very bottom here when I was scrolling down earlier. There you go. Bitcoin clean energy usage reportedly exceeds 50%. Will Tesla start accepting Bitcoin payments, right? If I were Elon Musk, I'd probably say I would not accept Bitcoin payments at this time, just because the future of Bitcoin looks a little uncertain. Just the price action, I should say the whole future of Bitcoin, just because of the price action right now. And on top of that, how should I say this in a pleasant way? He has to worry about the price action of his own stock, which is kind of very volatile right now. And if you guys look at Tesla on the weekly chart, all right, it's had a nice little pop. We're getting back up higher here. It's most likely going to break back down here over the next few weeks. Hopefully he can get some good stuff cooking here, though. There's Elon Musk. If I can follow this right here. Elon Musk is one of the only guys that can take a breakdown and turn it into something really nice, because he knows how to market attaching it to technical analysis, which I have not seen anybody actually effectively do in the past. But I guess if you tweet a lot and you have a lot of followers, you can really drive the news cycle for your own individual stock, right? And again, we did have a golden cross there that helped us out a little bit. We're looking for a big death cross right here, and we actually haven't had a death cross like this since 2019, right? But again, this is a news cycle. They had good earnings and they started to really pop off because Elon Musk is a genius when it comes to this type of stuff. But I'll leave you with that, everybody. Hope you guys all have a great rest of your day. Take it easy. Just be prepared for some choppiness. Really, it's the choppiness caused by inflation and a stronger dollar. I want you guys to remember that, okay? The dollar's been breaking out. We have higher inflation. We just got a higher than expected inflation number earlier this couple days ago. You know, we're looking for another breakout here. If we break out above, let's say 105, really, guys, it's not going to be good. You guys could already see, if I take away everything else and we just look at the moving averages, we're going to have another golden cross sometime in October. Also, kind of explaining, like I just said, a lot of bad stuff can happen for the whole market in October, and that can be driven by a very strong dollar. Last golden cross led to that. Again, I know tons of bad policies and stuff like that. Death cross led to all that. So there's pretty basic moves here as far as the dollar is concerned, but it also means that, hey, inflation could be getting hotter and people could be freaking out a little bit more going into the end of the year, unfortunately, when historically the end of the year is usually a time when everybody's pumping up and selling stocks so they can pay off their taxes and whatnot, okay? So hope you guys all have a good rest of your day, and just be aware death crosses are incoming, and it's going to be a little bit of a painful experience for some of you guys that tend to forget these larger signals and you guys trade too much going against them. The big point of this is just to trade with the flow. That way you guys have a better chance of just holding